Hello students, welcome back. Today we will discuss a new chapter. It is fourth chapter, measurement of revenue, expenses and income. So very small chapter, and it includes basic terms of accounting and business. Okay. First one is revenue. So revenue is the income generated from normal business operations. According to American Accounting Association, revenue is the monetary expression of goods and services produced and transferred to customers during an accounting period. So here, revenue is nothing but consideration received from sale of goods and services. Okay, so revenue is nothing but income generated from normal business operations, or the amount received by selling of goods, then rendering of services. Okay, then revenue producing activities which generates revenue. Which are those? What are those? Collection of cash, sale of goods, rendering of services, production and receipt from orders. So these all are the activities which generates revenue, or which produces revenue to the business. So it may ask for 2 marks. What are the revenue producing activities? Collection of cash, selling of goods, rendering of services, then production, then receipt from orders, etc. Next concept is measurement of revenue. It means measurement of money value of goods and services transferred to the customer. So here measurement of revenue sorry means nothing but expression of, or measurement of money value of goods and services which are transferred to the customer. Okay, then criteria applied to recognize the revenue. Criteria or circumstances in which revenues are to be recognized. What are those? Revenue recognition at the point of sale, then revenue recognition in sale of services or rendering of services or performance of services, then revenue recognition in construction work, then installment credit sales, then revenue recognition when a firm receives interest, royalties and dividends, then money received or amount paid in advance. So these all are uh, the circumstances in which the revenues are to be recognized. Okay, at the time of point of sale, at the time of rendering of services, then during construction of work, or installment credit sales, and when firm receives revenue in terms of interest, dividend and royalty. Okay, or any amount received in advance. Okay, so these all are criteria applied to recognize the revenue. Next concept is expenses. When the amount is spent and the economic benefit is received immediately is called expenses. Say for example, payment of rent, payment of salary, then payment of wages. Okay, the amount incurred to get immediate benefit is known as expenses. Then prepaid expenses, as the name indicates, prepaid means expenses paid in advance. Okay, so these all are the future expenses that have been paid in advance. Okay, then loss, the excess of expenses of a period or its related revenues is termed as loss. So excess of expenses of a period over its related revenue is termed as loss. Or in simple terms, when expenses are more than the related revenues, it will be called as loss. Then what is profit? Excess of income over its related expenses is known as profit. Okay, then expenditure, spending money or incurring a liability for some benefit, services, or property received is called expenditure. So here expenditures are the amount incurred to get long term benefit. Okay, or spending money or incurring a liability for some benefit is called expenditure. So expenditures are classified as capital expenditure, revenue expenditure, and deferred revenue expenditure. And that the most important, capital and revenue expenditure. Capital expenditure is nothing but whose benefit is not exhausted in just 1 year. Okay, the benefit is available for more than 1 year. Say for example, uh, purchase of fixed asset, right? So fixed assets are the assets which can be purchased not for resale, right? So these kind of assets are purchased with an intention of generating uh, income, right? So we can get the benefit from these kind of assets for longer period of time. So it is called capital expenditure whose benefit is not exhausted in just 1 year. So these expenditures are non-recurring in nature, right? One time investment, we can say that one time investment. Once we have invested the amount, we can get the benefit for more than 1 year, right? What are the features? It is non-recurring in nature, non-recurring or repeating in nature. Okay, one time investment. Then that is once in a lifetime of a business. Then it is incurred to acquire new fixed asset. Then the asset not purchased for resale, and it serves the business for a longer period of time. Okay, then what about revenue expenditure? It is an expenditure whose benefit is exhausted within 1 year. Say for example, payment of salary. So we can so we have to incur the amount again and again. We have to spend the amount again and again. So these kind of revenue expenditures are recurring in nature or repeating in nature. So again and again we have to spend the money to get the economic benefit. Okay, payment made to salary. So monthly or weekly we have to pay the salary to get the benefit from that employee, right? So it is recurring in nature. It has short term effect. It does not help to increase the production capacity of assets but helps to maintain it. Okay, so revenue expenditure does not help to increase the production capacity of assets but it helps to maintain. Okay, next last one is deferred revenue expenditure. Deferred revenue expenditures are the heavy expenditure of revenue nature incurred for getting a benefit which extends up to um, extends to 2 or more years is called deferred revenue expenditure. So deferred revenue expenditure means whose benefit is exhausted within 1 year, right? But deferred revenue expenditures, the benefit can be extended up to 2 to 3 years. So these all are revenue in nature only, but the we can get the benefit up to 2 to 3 years. Say for example, investment made or amount spent on advertisement and repairs of machinery, right? So we can get the benefit for 2 to 3 years. This is called deferred revenue expenditure. Then income. Income is money that an individual or business receives, usually in exchange for providing goods or services or through investing capital. So here income or net income, or we can say that net profit, right? So here income means the final balance left after deducting all related expenses, right? Then what are the objectives of measurement of net income? Why do you need measurement of income? to provide useful information to interested users, and to pay income tax. Payment of income tax will be depends upon the value of net income, right? And to determine the profitability of business, and to increase the resources of the business, to examine the efficiency of the business, and to prepare budget, and to plan the future activities of business. Okay, to fulfill these objectives, measurement of net income is necessary. So these all are about fourth chapter. Okay, thank you.